Hi, welcome to this video day, which is our weekly Forex forecast. It is the 6th of November. It's a Saturday. We're just going to pick out some pairs in this video which we think could offer really good risk-reward trading opportunities for the week ahead. We've got quite a few charts to look at. We'll go and take a look at them in just a moment. Now I want to go through some tips on finding low risk, high reward trading opportunities and trading reversals. In terms of most of our trades, we are looking for reversals, either to swing trade for correction of overbought or oversold, or hopefully in many instances to catch a long-term trend change. Now, in terms of looking at the opportunities and going through trend reversals in more detail, we'll go over now and take a look at the charts in our member centre. But just before we do so, always please do keep in mind, it is my view, as of this specific moment in time, it can obviously change in line with market action and conditions. If you want all our trading techniques, you want to learn our trading strategy, you want to see our technical sentiment analysis of 14 FX pairs each day, all you need to do is click on the link beneath this video and you can get live access to our member centre. You can also follow us on Facebook, join our Facebook group of traders, and finally check out our recommended regulated ECN broker. Right, now what we're going to do is go and take a look at the charts. Right, we're on our first pair, which is USD CAD. Now in terms, when we're selecting out pairs to trade, we're always looking for the most overbought pairs or most oversold pairs and looking to go for a trend reversal. Now in terms of the CAD, it's one of the most overbought pairs in the majors in our view. The other is the New Zealand dollar. So we're looking for shorting opportunities against those two commodity currencies. Now, in terms of when we're doing our analysis, this is just for new viewers. We're not just relying on technicals, okay? Technicals don't give you the reason for why prices are moving, which you need to know. So we're looking at the big fundamentals and sentiment towards them, then that will make our technicals very simple. Now you do have the USD, it kind of spikes up to 128 here, comes back, and then to the downside. So 128 to 123, about 500 pips. Why did this occur? Well, the market is seeing the Bank of Canada as hawkish in terms of hiking interest rates going forward. Well, that's bullish for the currency. And also commodities in the period have been strong. So that is supportive for the CAD, which is obviously a commodity currency, natural gas and crude oil, for example. But too many speculators are short. Okay, you do get this brief poke through 123 here, big level. I haven't drawn it in because we don't need it now in terms of the way the setup has progressed. But 123, a big round number, comes back through, goes blue. Briefly get outside the range there. Back to test 123 again. No more sellers. And the majority, if you read forecasts, are looking for the USD to go down. It doesn't. It goes up. Briefly pokes through the 124 level. Then we get decisive close above the level. And on Friday, just a small blue candle. Now, crude oil being strong, that's in the price. Natural gas being strong, that's in the price. And a hawkish Bank of Canada is discounted, and you can see it when it's bouncing around between 123 and 124 that is happening. Okay, this in Dow terms would be called distribution, where you have a big move down and you get sideways, then you get a move the other way. Okay, now in terms of our targets, they're based on the fundamentals and sentiment. 126, then 128, so plenty of upside potential if we're right. Now, in terms of our entry, 123.85, stop 123.50. So we're not going to lose much if we're stopped out. It's going to be 35 pips, okay? But I think we should now gravitate the upside. If you wanted to come into this pair, I'd look for any blue next week, or you could look for a dip to this level and buy off it on strength. This candle makes a new high next week. I'll put my stop to 123.80, so it'd be a 5 pip loss, but potentially, a lot of upside ahead. Okay, 150 pips to 126, then 350 to 128. Okay, now in terms of selling the CAD, another pair we really like CAD JPY. Now, in terms of, we were saying CAD, one of the most overbought major currencies. In terms of the most oversold major, the winner by far is Japanese yen. In the last few months, it's been really, really weak. And check out this rally here from 85. It just really moves up strongly. Then you slow up here, touch 93, so 800 pips. Now, in terms of your bullish CAD fundamentals coming into play, but also bearish yen fundamentals, which are basically is a safe haven currency. Stock markets were firm in the period. It's a negative yield currency, so the CAD pushes up. Okay, but speculators have built up their biggest short yen position. This is across the board in a year and a half. Now, when we get up here, you see these candles slow up. This is the buying slowing up. Too many speculators are long. There, poke at 93. That's the reversal candle. Then you come through 92. Can't get back up, okay? Then away from 92 down to 91. Now, in this period, stock market's very, very strong. But the yen is not weakening. It's pushing the CAD down. So that's encouraging. We're now looking for a breakout to the downside through this level, go to the big levels, 88, then possibly 87. 92 is now resistance. If you want to come in fresh to this one, you come through the bottom of the channel, okay? Pop your stop behind the top of the channel. Mine is at 92.40. I'll bring that down to 92.20, okay? Probably on Monday. If we break out, then we'll see how we go. So not much risk against the potential reward. So really like look at that trade set up last CAD pair. Euro CAD come down from 150, one blue candle there after those reds, and a load of reds, one blue candle and a few reds there. Takes down to 143.30. So that's 670 pips. Okay, but then it's sideways action. Dow terms, I think I said it on USD. This is accumulation. Market's still very bearish of the euro, bullish of the CAD, but we can't really get lower. We poke at the round number a few times here. Now we're gravitating to the upside. We've got a very aggressive trade in here, 143.35. We're just above the 144 level. I want to add to this trade next week. It'll be above this level here. And look for a move up to 147. And I like the way the Bollinger Bands tighten up. That indicates low volatility and a possible big move coming. That could come either way. My betting is, hopefully I'm right, it's going to be to the upside. So there's some CAD pairs which are really interesting. Now I want to have a look at NZD USD. Right, NZD USD. Now in terms of the NZD, it's very overbought in the short term across the board, and it mounted an impressive rally there. Basically 300 pips pretty quickly. Why? Because the market sees the Bank of New Zealand being hawkish in terms of hiking interest rates going forward, okay? So you get a big rally. What we need to keep in mind is the same happened over here. Traders bought up the New Zealand dollar, a hawkish Bank of New Zealand, and then we dropped back. I think the same will happen again. We came up really strongly. We wanted to come off the round number, which we did, okay, 71.40. Then we have a battle to try and get back up. You can see these tails poking up, blew up through the level, no more buyers. Red still stay above the support line here. But that red, I think, here is the end of the big move up. Blue tries to get back up again, red down. A lot of these markets are very choppy, let's say. A bit disappointed on Friday because we came back above the 71 round number. I was hoping we would stay outside or stay below the level, okay? You want to do this one, just basically sell through the level, stop back behind the double trend line resistance. I think we could get a 69. I actually think we could go a bit lower, but if we got 69, we'd be happy. Always like aggressive entries, as you see, 71.40. Got my stop at 71.65, so it's 25 pips if we lose. Obviously, I hope we don't, and we get some selling to the downside. Now, obviously, I like NZD USD, and with the yen so oversold, I'm going to like NZD JPY. Big move, 77 up to 82, so 500 pips. get above the round number, and then we can sell back through the round number. You can see our entry 81.70. Then we try and get back up above the 82 level. We can't do it. In terms of the NZD, yes, speculators are piled in to long positions. So they just run out of buying. Okay, red down, blue back up, red down, and we do break the 81 level there. This is a simple one if you want to do it as a new position. If we stay below 81, just sell. Okay, stop back behind here. It's a really, really good risk to reward, obviously, if our targets are hit. Okay, now in terms of what I want to look at next is one more yen pair, then we'll look at some USD pairs. Euro JPY. Now in terms of this pair, the euro really starts to push up when it gets through the 130 level. A quick move up above 133. Obviously, general yen weakness contributing to that move up. We thought it was kind of a bit of an overdone move, considering the euro is a negative rate yielding currency as well, or negative rate currency. But yeah, wish I'd have bought it. Anyway, we get up here, and basically we think it's gone too far too quickly. We get above the 133 level, we settle above the round number. We want to sell through the round number. Okay, so through 133, you can see it 132.70, come in, and then we get, look at these candles, really choppy price action, but we can't get back up to 133. This candle then takes out 132 and we get follow on. Okay, now in terms of this pair, how would you play it if you wanted to get in? If she raised back towards the 132 level, you could sell off the level on weakness, or if we go through 131, look for follow through. Okay, if we go through 131, the stop can come in very tight behind 132, say 132.20 on 132.40 at the moment. Change that on Monday. Okay, probably if we get some weakness. So yeah, basically I think euro, yeah, it's going to go back to chart lows. Now in terms of the euro, I'm just going to show you Euro USD. I've done numerous videos on the euro. We haven't changed our view for a long time. We just think it's going down. We did make a new low on Friday. We came back up, although there's very low volatility. We think we're going to break down again. Now, in terms of Euro USD, I generally don't trade it because it's a bit slow moving. I prefer trading faster moving currencies. And in terms of the euro, if it's going down or going up, the correlated currencies tend to go quicker. Now I want to look at one that I really like, which is USD SEK. Now in terms of USD SEK, looking for a big move up. I'm looking for a move back to chart highs, then hopefully to 9, then 950. Obviously if the euro is going down that way on the SEK is very correlated, Swedish krona, with risk on, risk off. It's been unable to push the USD down much in terms of big risk on. Yeah. Also, in terms of the SEK, Sweden have probably the most dovish central bank. They've got no intention, in their view, of raising interest rates until 2024. Yeah, I personally think the USD is going to get stronger. I think I said it earlier, I'll do a separate video on the USD, but yeah, we did on these 3 candles here, we couldn't get through 850. Okay, blue comes up, red comes down, blue double bottoms. That there is support. If we break out to the upside, look for follow through to 880, but I think we could go up as high as 9 or 950. And I've got a USD SEK monthly chart here, and you can see dollar's kind of worked its way up. Support line here, resistance, that's the daily highs, 20-month moving average, take it out, 9, and I think we can run up as far as 950. So I'm hoping this one's going to develop into a really long-term trend. Okay. Euro GBP. Now in terms of Euro GBP, we had a nice move down, kind of consolidation here, and then a big spike up on Thursday, particularly big blue candle. Actually, funny enough, someone was saying to me, when it broke up on this blue candle through the mid-Bollinger Band, is it a good long trade? And I said, well, technically it looks good, but I'm not sure. I should have done it, shouldn't I? Okay, I was looking for a short trade, which I missed. Now, in terms of this big blue, why did we get it? Bank of England on Thursday intimated that they would raise interest rates. Then they didn't, okay? But they said they'll raise interest rates in the next few months. But the fact they didn't raise interest rates brought in a lot of buyers. Then the buying follows through, and then the buying dries up and we come back. It's a knee-jerk reaction. Yeah, the UK will probably raise interest rates. They'll certainly raise them before Eurozone, who's nowhere near raising rates. Okay, I'd also argue the UK economy overall is in better shape. Okay, that's just my personal view. So I'm looking for a potential swing trade short, which could turn into a trend following trade. Exhaustion. We now need to see come back through the two bodies. We come through the two bodies, we've got a full candle outside of the outer Bollinger Band. That normally indicates, yeah, you've run too far, too fast. So sell through this level, look for a move to chart lows. Stop behind the big 86 level. Now, hoping we can get down longer term to 80. Let's have a look at the monthly chart. On these bodies here, you can see them. Okay, got a lot of resistance around the 86 level. Okay, can't test it obviously. If we can turn down to chart lows, take out the double bottom, I think we'll go down to this level here. That's basically where you kind of struggled around the 80 level here to get through, went down, come back up. You get the big blue decisively takes out 80. I think in terms of the big fundamentals, that would be fair value for the pair. That's just my view. Obviously, we'll have to see if we get there. Now, in terms of just one more pair, I want to look at GBP CAD. CAD very overbought, as I've said, and so is the NZD. I like the look of a GBP long trade against both. I'm just going to do GBP CAD here. You obviously get the big rundown on the red there. Then you get the follow through. Then you get the exhaustion. This candle outside of the outer Bollinger Band, most of it. Just really want to trade strength back through resistance, which is also a round number, so above 168. So you can see my level, 168.30. Then see if she runs. Where do you put the stop? Well, I'm just going to stick it behind the tail. Okay, I'm assuming this is exhaustion. It might not be, but if we suddenly break up and we get some blue, then I think that will confirm it's exhaustion. I'll bring my stop in tight behind the 167 level, say 167. 70, something like that. We'll have to see how we go. But to correct oversold, we should get up towards the 171 level, might even run on to 172. So if it works out, obviously, it'll be a nice trade. Now, in terms of the pairs we've seen, I will look at USD pairs in a bit more detail next week. We put a few in the mix, but mostly we're in crosses, okay? Now, in terms of the way we trade trend reversals, we're trying to not have too much risk. If we get a rebound in our favor, put the stop, bring the stop down or up in our favor to lock a small loss or hopefully a small profit, and then look for runs to our targets. Now, not all the pairs, the majority of the pairs are going to get to our targets, but over time, enough do to basically get us, good overall long-term profits. Okay, like reversal trading, I like trying to catch the turn, and I'm quite happy. Well, not happy. I don't mind being stopped out. Okay, we get stopped out frequently, but when you skew the risk, so it's pretty small, the reward is pretty big. You don't need too many trades to go right for you for an overall profit. Right, that's the video for today. Hope you enjoyed it. Thank you for watching. Take care and have a good day.